2025. So we'll just go over the last week and look at a few things. So price this week continues to be sort of very bullish, and has basically come in and filled 50% of that daily point of interest. So with price being above that 50 EMA this whole week, and obviously the last few weeks, that may have been an area to have looked to see price push into. Now, we have a lot of wicks that were filled. Mainly this was the big wick that I was looking at the beginning of the week that could potentially have been filled. So I'll just pop that there. Where's Monday? And vice versa on Tuesday, was it? So we've got this last up close candle, and that was the wick that was filled to the downside. So not that has any bearing on much, but just interesting to see that when we have these large wicks, it does tend to want to come back, fill them, take liquidity, that sort of thing. So I have marked out all the Asia sessions for this week. So I think we know what we need to look for. We know what we need to wait for. And it's essentially trying to put the puzzle pieces together to look at something that goes, well, what I want to see first. See, again, all in hindsight. So hypothetically, we come into Monday and we're thinking, right, I can see this last up close candle has a very large wick, or actually that'd be an extended wick, Phil, sorry. So if I want to see this extended wick, I'll just make that visible on the daily, maybe the first thing I need to do is not do anything until price has touched that. And I think sometimes this is where I may be getting ahead of myself, because I know on the videos what Steve Luke would do is wait for that to happen first, then look for a setup. So that's one thing we can potentially look to change, is if we think the higher time frame wants to fill, say, this daily wick first, can we look for entries? Because again, we know we're bullish, so we know that the highest probability area to look for a trade would be down here. So we're on the 15. One thing we could do is say, well, once that's happened, which occurs on Tuesday, so Asia Tuesday, that's what we want to wait for. And then look for potential long setups after that. So Tuesday, London runs the Asia highs. When we come into New York, again, we've seen this strong reaction from this area, which again, when I've looked down lower, we know there's a 5-minute block that it reacted from, but we've had a strong reaction coming into New York, and we've left some imbalance. What we also then have as a potential target here, if we know that the daily wick's been filled, we can see Asia has been taken. We've then had a strong reaction above all these highs, and we come down, and we've also then got this Asia high over here, which is yet to be touched. So you've got your daily confluence of that extended wick being filled on Tuesday in New York. We've got an obvious imbalance left, strong reaction, and we can see that's also rejected the 50 EMA here, which you could potentially use as a confluence. But if we were to have set our order at the imbalance, it wouldn't have hit 3R. But again, if we're just targeting the Asia high, we would have got, could have got a 2.5 to a 2.5R. And again, in the grand scheme of things, that would have been a fairly clean trade because it would have entered here, tapped in, gone, and then potentially you could be done for the week. So that's just using the higher time frame and those types of things. Obviously Thursday, which was over here, we had FOMC, which took a lot of things out. So that's one potential look at how you could do that. Obviously, anything larger than that, you would have been stopped out eventually on Wednesday. If we're simply looking for a 15-minute setup, what could we look at? Well, we know that if we're bullish and we see that price has taken out the Asia low, so Wednesday, we've got Asia low taken, London isn't able to take anything else, but then we push lower in New York. Where would the imbalance be? So we come into New York, we can see that we've taken, again, some liquidity down here, strong push up, and we then leave sort of an imbalance here. So again, if we're just looking for potentially just a setup where we can see there's clear imbalance left, what would have happened on this trade? So if we put a long position in, and again, just targeting the Asia high, would have got a 2R from that one. And then obviously price fell and took it out. Again, in this particular position, 50 points would have been more than enough, which would have allowed for a 3R. But if we stick with 100 points, just because we know that's the cleanest setup. So far, looking just at imbalance left, logical reasons why we're taking it. The first trade, daily external wick's been filled. We can see we've still got this Asia high over here. Imbalance left in New York, 100-point stop, targeting just the high, 2.5. The next day, Asia low's taken. Large wicks showing a lot of rejection. We leave imbalance in New York, and that's again around 4 o'clock. We're tapped in, just targeting the Asia high, 2.3. Come in to Thursday. London not able to take anything out of Asia. Coming into New York, we take out Asia high. And there's just no real setup on Thursday. So Thursday essentially would have been a no trade day. Coming to Friday, again, London takes out Asia high, strong push up. In New York, again, would have been no trade setup using that sort of train of thought. And that's just using clear imbalance as a setup. And you would have had, what, 4.8 for the week? And that would have been that. So that is just using the 15. One thing we know that does work well and does seem to have good reactions is 50% of an hourly wick. So again, let's look at, for some reason, it doesn't ever really want to show the New York session on the hourly for some reason. What's that? That's 2 o'clock. So if I go to the 30-minute, just to sort of see. That's not really that clear. So on the hourly, if you're just using the hourly chart, for example, so Monday, again, not really much to speak of. Again, if we're waiting for this low to go, which it does. Tuesday, again, 2 o'clock. You see this large, if you can imagine, we've got nothing here. We've got this large wick. This is the 3 o'clock candle. Let's just look and see what you would have got here. So price does go into the 50%. If we were targeting 50%, would 100 points have covered that? Yeah. Wouldn't have got a 3. But again, the high of that goes to 2.6. And again, if we're just using, say, the hourly, so if we're looking for obvious areas, you can see you got equal highs here. That's taken. Would have got 2.4. And that would have hit pretty quickly. This was Wednesday, wasn't it? Nothing really. I mean, obviously, again, this was the wick that I did eventually look at. And again, with a 50 pip stop, it would have been fine. I think with 100 pips or 100 points, because that would again would have been at 3 o'clock. Again, that there looks like it would have hit 3R. So if you use just the 50% of that with a 100-point stop, 3R would have been taken. Definitely would have got 2R before the news, before all this craziness. So that would have tapped. Oh, actually, no, it wouldn't have. That would have been after the madness. My bad. But again, that's interesting to see. Asia, coming to London. What's this? And again, if we're thinking we're still very bullish, there's a couple of things here. We've got if we use these two blocks together, you can see we've got that. What's that? That's 1:30 or 1 o'clock. Hourly wick at the bottom would have tapped in. If you'd set just and again, this one would be more a sort of set and forget rather than worrying too much about the time of day, because sometimes moves on gold happen not in the session, they'll happen in Asia, they'll happen in London. But if you'd done that, tapped in at 1 o'clock, you would have got a 3R just using wicks on the hourly. With the bias going, we are bullish. What else have we got? Anything else? So again, that would have hit at 1 o'clock. But again, just to sort of show, I mean, this was at 7. So if we were looking, so everything's very bullish. We've got a set of wicks, which again would have been tapped into at sort of 8 o'clock. So that would have come down, tapped in, and again, 100 points would have been fine. That moves. I mean, even looking at Friday, if we thought, right, so price has, again, it's just cherry picking, obviously. Price has gone all the way up, and nothing can go up forever. We know that with these overextended moves, at some point you're going to want to see a pullback. When we get into sort of London and New York, it is a bit more contained. So you can see wicks up and down. There's no real imbalance here. And again, completely just off the cuff. So we can see we've left this kind of doji candle here. If we were looking at 50% of that wick, oh, what could we have got there? Now, granted, I know it's cherry picking, it's in hindsight, but again, you would have been able to get tap 3R. That would have been at 3 o'clock, just using the hourly chart. So yeah, there's definitely things within this that we can look at, and I think it's just trying to reduce the amount of days that we're trading, essentially. I mean, if you're looking at this hypothetically, you probably would have had, again, 10R. I mean, even just using the wicks, that's what, 2.4, 4.4, 7.4, 10.4, 13.4, 12.4, something like that for the week. And that's just, there's things that do happen. It's just, we never know which order they're going to happen in. So some interesting things, but again, just building up more data, building up more examples, just going over things at the end of the week, looking at what worked, what happened, and then they're not always going to work out in the future. But again, it's just a case of, well, what if I try 50% of this wick, or I just wait for the imbalance? Now, I know there were a couple of trades that I took on, like the 5 minute, for example, with the bodies of the candles, and it is this like on Monday, sorry, for example, this one there was imbalance there, and again, if you're looking to target that wick, that imbalance got filled, and you would have got 3R. And that was obviously London not taking anything, but if you are anticipating, of course, that wick to be extended, but it filled, sorry, the extended wick to be filled. Let's have a quick look on the 4 hour just to end this off. So what have we got? Would that one possibly? So again, on the 4 hour, probably a lot fewer, a lot less setups to go at. But again, if we just start with a higher time frame basis, so we know price is bullish. We can see we've got this last up close candle, we've got an extended wick, so we'd anticipate for price to fill. So we're only going to look for a 4 hour setup once this has happened. So that would be Tuesday. Tuesday that happens. What time of day would that be? That would be in the morning. We just want something that's nice and clear. So there's no imbalance set here. Where are we going? What can we see? So the only thing I can see is on Wednesday. And again, this is in the evening. So this is after FOMC. And that basically is Wednesday. And again, this is more of a set and forget sort of setup. And I think on the 4 hour, you'd need to have a larger sort of stop. So if we've left imbalance, and you'd say there's a 4 hour point of interest there with this imbalance, if you use the, let's draw on, for example, just lock this, So again, we've got this point of interest after price has moved away. And because it's a 4 hour, you'd want to cover it. You could use the one tap, and you just sort of set and forget and go, well, if I'm bullish, the stop to cover that would be about 160 points. But you would have been able to get a 3-hour trade with 160 points. And that would have been set and forget, because you're using the 4 hour, that would have closed in the evening. So again, you can just look in the evening, tap, you would have got a 3 hour. What have we got here? Yeah, it's not really, because again, we're bullish, so counter trend wouldn't really work. Even if you want to go for a 1-to-1 on these higher time frames, just to go, well, I don't really want to hold for the moon, but I could have got a 1-to-1 there. Even coming into the week, we can see that we've left a point of interest over here. Again, it's all hindsight, it's not any sort of context to it, but again, if I covered that whole area, could I get a 1R? Again, because that's like 260 points. But you would have got a 1-to-1 out of that. Big zone, tap, done. Anything else? It's not really anything painfully clear, gotta be honest. But again, not ideal, because again, it's very sideways this last week, but I'm waffling. So that is what we've got there. I guess the only other thing you could really look at is using the daily, and also using a lot bigger stops, looking at things that potentially could have happened, and then holding the trade for a lot longer than a day. And that'd be it. So the simplest one would be, I want this wick to fill. So if I set my entry at the wick, at the very bottom of the wick, and cover this wick low here, so that's 120, it's not too bad. And I want to see price come and take out this wick, just that one position on the daily, you would have had nearly a 7R. So well, you could argue saying, well, if this wick's going to fill, potentially this wick may want to go as well, because again, if it's going to push this high, it may go there. Would have got a 7. If you want 50% of this, again, it's all hindsight. There's just using the daily chart on that wick, and again, it's perfect in hindsight, because that's what we're looking at, isn't it? Similar sort of over here, really. Leave a point of interest, imbalance, and again, you'd be holding trades for a lot longer. Covered the low, so again, that's nearly 300 points. And if you're then targeting this high, because it's the swing point of this leg, would have got 3.5 off of that potential daily position, just using the imbalance, one tapping the point of interest, go. And then over here with this sort of extended wicks, so we can see all these wicks, wick, wick. Obviously, I don't know how price would have moved up to get that. But yeah, again, I'm just sort of spitballing, just trying to find ways that might make things easier. So again, at the moment, everything's trending up, but you know, there's options. These may not play out all the time, but again, it's the higher time frame, so I'll leave it there.